Welcome into this carrier update presented by Uptake. Donnie, we pulled up a chart here that's one that kind of really shows you the state of the market.
Yeah, so the reason I brought this chart up is what we were just kind of talking about, the tweener haul loads. That's that band range, that 500 to 799, in which used to be a great lane before ELDs. That's when the owner-operators had 2 or 3 log books. They'd pick up in the morning, 700-mile run, deliver the next morning. Jump in, get another 700-mile run, pick it up by noon, deliver the next morning, and just keep cutting those 700, 750, 700, 750, and just racking those miles up for the week. When ELDs came out, that had to stop because you could now GPS the trucks and know exactly where they were.
Yep.
So this became, that mileage band became in that range that nobody really wanted to run anymore, because now it's pick up, run to the evening, take a 10-hour break, then run another 200 miles, and it just made it very inefficient for trucks and trucking companies. So during times that there's a lot of choices out there for freight, a lot of volumes, they'll take everything and accept these last. So they're going to reject these first. That's why you see 30% rejection rates, October, November, December of 2021. Besides just the pandemic, this is about where these are. But as freight volumes tighten up and the choices get smaller and smaller and smaller, they have to start accepting these to keep their trucks rolling.
Yeah, I mean, look at May and June, right? At like 13%. That was that hesitation to accept these, right? Now we've seen that, you showed it in the first carrier update, that volume deterioration continued throughout June, July, and August. Guess what?
So this one map is a key indicator of what is going on in the markets. Yep. And as markets deteriorate, as markets soften, those companies will start accepting it. So here through February, March, April, they started accepting these tweener haul loads because they had to. Mm-hmm. There was nothing else out there for them to take out of certain markets. And you have to keep your trucks rolling. If you don't, then you're gonna have drivers quit. So great point right here. Look at your tweener haul rejection rates, and you can see as a key indicator how trucking companies are reacting in these markets. Let's get in one more map here right quick before we go. We'll probably talk about this one a little bit now and the beginning of our next section, because this is our contracted rates and our spot rates as well. Again, you see contracted rates have dipped down, that big waterfall that we were talking about here off a cliff. They picked back up a little bit through mid-August. I don't expect to see a big bump through the Labor Day or the holiday. And then what's going forward in September and October is going to be very questionable how they're going to react during the fourth quarter. They will start picking up some as we get into the holiday rush. But spot rates have dropped back down, a little bump we saw here, but down to 269 for our NTI.
Yeah, definitely introducing stuff. We'll be sure to check in with it in that next update. I know this is one that I enjoy talking about a lot, but right now we'll toss it back over to Kaylee and Anthony as Kaylee joins us.